What if I told you that the moment the entire market flips bearish is actually the moment people should be paying the closest attention? Right now, Bitcoin is breaking down, influencers are calling the cycle finished, fear is spiking everywhere, and the same people who were screaming for higher prices during the peak are now convinced we're headed for a full collapse. But every time we've seen this exact combination of panic, emotional selling, and ugly charts in previous cycles, it's set up the next major opportunity. But there's one problem. I noticed only 20% of you are subscribed with bell notifications on. So if you want to catch this alpha before the rest of the crowd, then I highly suggest you subscribe and turn on notifications. Now let's get into it. So just look at the charts. Bitcoin has officially broken below the 50-day moving average, and the reaction to support has been pretty weak. Buyers aren't stepping in with the strength we normally see during healthy pullbacks, momentum looks tired, and volume is thinning out. To add more pressure, Bitcoin's chart printed what we call a death cross, which is when the 50-day SMA falls below the longer-term 200-day SMA, and it's a heavily bearish sign. Even the RSI has dropped into oversold territory for the first time since April. That tells us sellers are exhausted for now, but historically, each time the RSI hit this level, Bitcoin formed a bottom within days and started a multi-week recovery. But when the crowd is emotional, nobody sees that. All they see are red candles and FUD on Twitter. And it looks like the FUD's working. Just look at the fear and greed index. It fell to levels we haven't seen since February 2025, and the last time since then was at the end of the previous bull run in 2022. That shows us just how extreme the sentiment has become. Influencers who were shouting about $200,000 Bitcoin a month ago are now calling the bull market over. YouTube views are in the gutter, and influencers are barely posting anymore. Some are selling publicly, while others are throwing out ridiculous predictions for 60,000 or lower. The tricky part is, this might look like what a top would look like, but this also looks exactly like how bottoms look like when they form, and most people can't tell the difference. Then the DApp radar shutdown hit the timeline and poured more fuel on the fire. People treated it like a sign that the entire crypto economy is dying. And personally, it gives me PTSD flashbacks of 2022 when companies and firms were shutting down left and right. Now for the technicals. Bitcoin has been trying to hold the 90,000 range, and we saw it briefly break into the 80Ks, but it quickly hit support and recovered back over 90. Now if Bitcoin can reclaim 95,000 and close above it, that would be the first sign of a reversal forming. Until then, price may chop sideways or even spike lower. And like every major dip in history, the same cycle is playing out. People scream lower only, they look for every reason to justify fear, they ignore the data that doesn't support their emotions. And when the reversal comes, they're the same ones asking if it's too late to top blast. So how are things looking with this quote unquote market reversal that we're all waiting for? Well, now that we've covered the fear and technicals, I'm going to move on to tell you why the long-term picture is still bullish. First off, some of the most important ecosystems within crypto have not stopped building tech, expanding partnerships, and growing their network overall. Solana is the perfect example of that with how they're rapidly integrating into the TradFi system. This is no longer a crypto-only ecosystem. It's becoming real financial infrastructure. So let's break down the major updates from the past week alone. So check out this tweet from Solana's capital markets account, and we're going to start from the bottom. The Upexi Treasury announced a $50 million share repurchase program fueled by Solana Treasury gains. This is a publicly traded company using Solana as their treasury asset. And it's crazy that Solana is mentioning these guys here because this video was actually sponsored by Upexi. Their approach to digital assets is worth understanding because it shows how publicly traded companies are positioning themselves in the space overall. While most were still debating whether to add crypto to their balance sheets, Upexi made a huge move at the start of this year. They executed a complete strategic pivot towards digital assets, specifically focusing on Solana. And by April, they had closed a massive $100 million private placement. Now here's where it gets interesting. Most of that capital went straight into Solana, making Upexi the holder of one of the largest Solana treasuries of any publicly traded company in the world. The results speak for themselves. As of their latest update, UPXI holds over 2.1 million SOL, valued at approximately $379 million, with 72 million in unrealized gains. Their adjusted SOL per share has gone up an impressive 82% since the treasury strategy launched, and investors from that April private placement are up 96%. But they're not just holding. Almost all their SOL is staked at roughly 7 to 8% annual yield, generating around $75,000 per day in revenue. That's real, recurring income flowing in every day. And what's particularly strategic is that they've also been acquiring locked SOL at below market prices, which means built-in gains once those tokens unlock. It's a sophisticated treasury management approach that goes beyond simple accumulation. Beyond just holding Solana, they've actually strengthened their position in the ecosystem by adding notable advisors to their committee, including Arthur Hayes, one of the most influential voices in crypto, along with Solana influencer Sol Big Brain and prominent investor John Nigerian. And these aren't just names. They signal deeper ties to both the crypto community and traditional finance circles. UPXI Inc. is listed on NASDAQ under the ticker symbol UPXI. Crypto markets are volatile, but seeing how public companies are building long-term strategies around these assets gives you a sense of where institutional interest is heading. If you want to dive deeper into their Solana treasury updates and investment thesis, then check out ir.upexi.com. The link is down below. Now, let's go rapid fire and cover the rest of the bullish Solana updates before moving on to the bigger picture. First off, SoFi just became the first regulated US bank to offer Solana trading directly from checking accounts, putting Sol in front of millions of everyday banking customers. At the same time, Figure launched YLDS, a fully registered public debt security issued directly on Solana, which brings real institutional yield on chain. Then we have Cash App bringing USDC support to their app in 2026, powered by Solana. This means one of the largest financial apps in the United States will allow instant stablecoin payments on Solana rails. That is insane mainstream level adoption. And on top of everything, Solana ETFs are heating up, pulling in more than $390 million in net inflows this week and extending a 15-day streak, while Bitcoin and Ethereum ETFs saw outflows. With all that support, Solana has become the #1 chain for USDC transfers, with more than 1/3 of all senders using it for speed and cheap gas fees. This growth is global too, with South Africa's first stablecoin recently launching on Solana. And finally, the New York Stock Exchange just launched options trading for the Bitwise and Grayscale Solana ETFs, giving institutions a full hedging toolkit around Sol. That's a lot. But zooming outside of Solana, the long-term picture is still incredibly bullish. Global liquidity is expanding again as governments increase spending, deficits widen, and central banks prepare to ease in 2026. I mean, we can all pretty much agree at this point that it's time to lay off the tightening and start cutting rates. And let's not underestimate liquidity. That right there is the #1 driver of asset prices, and every major liquidity expansion has kicked off Bitcoin's strongest runs. Plus, we can't ignore how governments are shifting towards support rather than suppression for crypto as a whole. We had the Clarity Act and Market Structure Bill allowing for more ETFs and tons of other benefits, updated staking guidance, opening the door for institutions, and of course, the Trump family voicing their support for crypto over and over again. By the way, if you want to navigate all of this with us in real time, the FireHustle VIP Discord is where I break everything down from technical analysis, market updates, entries, exits, macro, and more. Link is in the description down below. But to wrap this up, I know Bitcoin looks weak short term, RSI is oversold, death cross printed. Influencers won't shut up about the crash. Companies are starting to shut down and fear and greed is at its lowest in months. But these conditions have marked some of the best opportunities for crypto in the past, and the long-term outlook is still bullish. Liquidity, institutional adoption, and macro structure are still intact. And that's it for today. None of this is financial advice. Always do your own research, manage your risk, and never invest more than you can afford to lose. If you enjoyed this breakdown, then hit that like button, subscribe, and I'll see you in the next one.